late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, but me so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to jump into a second update. So I did an update on the macro and stocks. Now we're going to take a look at Bitcoin and crypto, because just to keep the videos a little bit shorter here. So what we do see, taking a look at our Bitcoin chart here, I've shown you this previous trend line kind of connecting the cycle peaks. What we saw is it kind of acting as resistance here, resistance in through here, resistance through here, resistance through here, and again acting as resistance right through there. So we have to recognize the potentials. This could be that cycle top. This could be that secondary move we saw here, even though we didn't really get that retracement. You know, I was hoping for it, I expected it. But, you know, we also could just come back, re-tag this kind of wick below the 200-day and continue to the upside. It would be pretty interesting. This is a very dubious kind of speculation here. We saw the first cycle in 2017 where we had a single peak. We saw this cycle in 2021 where we kind of had a double peak and then into the bear market. And it would be pretty interesting if this cycle we saw a triple peak. So maybe we see something like this. If we are to hold those lows, if we got a triple peak, you know, this is very dubious speculation in my opinion, but that would be kind of interesting. That being said, you know, we're not going to invest based on that theory. Let's take a look at our indicators, see what the likely direction is, and see if we can find any similarities. So we are getting that continued bearish divergence. That's something we need to be aware of. That's something we saw over here. So we saw bearish divergence between these peaks here and this peak, where the RSI is trending down while price is trending up. Same thing that we saw here from this peak to the third peak here. We are getting that continued downtrend, lower highs on the RSI. Same thing here on the MACD. We're losing that bullish momentum on the DMI. We see that DMI ADX line losing momentum. So this is trending down. Basically tells me that this move here, there was a stronger trend than this move here because the ADX is substantially lower. And then we also see that it's a weak trend and the bullish momentum is losing kind of that favorable position here by breaking below the ADX line. And we're starting to see that negative line putting in that higher low and then converging towards the positive line. In terms of the vortex indicator, we're still looking pretty good here. We see that the bullish momentum is favored on the weekly, but let's take a look at the daily. So that's where things kind of change. We did have the daily breaking above it. We see the also on the DMI, the daily has already broken above that and confirmed. So if the DMI negative line continues up, supported by the ADX line, and the RSI gets rejected here, that's not going to be the best sign, and we need to be aware of that. We need to be ready for that potential. We'll take a look here, but when we see pretty much based on these indicators, there is the potential that this could be the cycle top and we need to be ready for it. Now, a lot of people are not expecting it to be because there's not the same level of interest that there was in the past cycles. We've kind of talked about this. It's not the same macroeconomic conditions. It's not the same level of money printing. People don't have savings. You know, credit card debt's higher, delinquencies are higher. Savings are low. Inflation is still a fear. You know, we're not getting rate cuts. We're not really getting any economic data to support rate cuts. So we are just kind of stuck figuring out what's going on here. To me, there's a lot of similarities here to that prior cycle that we need to be aware of. I also don't think that things go straight up. You guys know my thoughts on that. We'll get rid of our drawings here, flip to the daily chart, and see what could be a potential entry. So basically, since the lows, we pretty much just rocketed to the upside without retesting any of this support down here. So we're going to have to come back, retest support before we continue up, in my opinion. There's a little bit of a buy order block here at that kind of 100,000 mark and that VRVP point of control. acting as support for now, but we'll see. We could just come up, get rejected by this resistance zone, break these lows, and continue to this area down here. So this is going to be my first little target, kind of this 0.5 Fibonacci down to this buy order block, or potentially down to the 786. That's going to be a big area of support. So we see we've got that Fibonacci, we've got our moving day averages, we've got our golden zone, we've got horizontal support, we've got swing breakout support, we've got buy orders block, or a buy order block here, and a liquidity pool down here. So lots of different support down here in this region from 82,500 up to about 93,000, 93,500 or so. So that's going to be where I'm going to look to add to my Bitcoin position potentially. We have a swing trade open. I think it's from 86,500 right now. So we're sitting nicely in profits in that swing trade. Let's see, where's that 86.5 roughly? You know, we're up 20% on that move, so really good. Just paying attention to that. And we see, we'll flip over to Bitcoin dominance here, see what's going on. Showing more weakness here, so that's kind of that bearish price pattern where we're getting that rising wedge. We're stuck under resistance. And let's take a look at our indicators. Also, what we're seeing, kind of, again, a little bit of bullish momentum favored here on the daily. When we take a look at the weekly, though, we are seeing that we're a little bit overheated and maybe due to lose some momentum. And we want to see dominance breaking down for altcoins to start outperforming, and Ethereum. Also, Ethereum's actually showing a decent little bit of strength here. We did have a nice breakout. If we pull our fib and look for that potential entry, you're looking at that 618 down to the 786, so about 1,800 up to about $2,000 for Ethereum, looking for that swing trade. If we come back here, that's our entry, stop loss below support, and riding it to the upside. Looking at ETH Bitcoin here, we see we are still stuck under resistance. So again, nothing really to shout home about right now. If we look at the time, or look at this downtrend here on the weekly, still a major downtrend, and we also have this kind of lower time frame downtrend right through here. So interesting to note, we're still stuck under resistance. We haven't really broken out of these major downtrends yet. There's a lot of resistance, but we're sitting at heavy support when it comes to the Bitcoin or the Ethereum Bitcoin pair. We're seeing a little bit of bullish momentum here on the weekly starting to build. But when we take a look at the daily, we also see kind of the bearish momentum here on the daily. So conflicting views between the multiple time frames. I would kind of wait for this. If you haven't swapped yet, you know, it's not the worst time to swap Bitcoin for Ethereum if you're an Ethereum bull and you think we're going to get a continued normal cycle. Honestly, at this point, I don't think I'm personally going to swap any more Bitcoin for Ethereum. I did my swaps. I have the Ethereum allocation that I'm happy with. I'm going to look to add to Ethereum with US dollars or a cash position rather than swapping my Bitcoin for it. But if you are interested in kind of swapping that Bitcoin for Ethereum, look for a breakout of this, hold these low or hold these highs as support, and then we would hopefully get continuation up to this here. We probably come back, tag the 200-day before we can go up and attack this higher target up here. This is the safer, more technical, kind of waiting for that confirmation on the high time frame. So Ethereum Bitcoin, it's looking all right, better than it was, but it still has some work to do here. So yeah, that's kind of my thoughts. I'm not really interested in swapping any more of my Bitcoin for Ethereum. I'd rather just add to my Ethereum position with the cash position that I've been building over the last few months. You know, so that's looking really healthy. When we take a look at total 3, we're uptrending here. We lost that uptrending price action on the daily, so now we're stuck under lower lows, lower highs. We're under that VRVP point of control, and we're stuck under this resistance here. So the next probable thing is looking at the high time frame weekly Fibonacci target, and that's going to put us here at that 618, around 775 billion market cap for total 3, down to about 725 is going to be that 618 to 786. That's going to be that target that we're looking for. So yeah, alts could bleed a little bit more. I'm not going to get too far into them. Basically, I'm very weary about alts right now, just with how Total 3. Let's take a look at Others Dominance. So that's, again, when we look at Total 3, it's showing a lot more strength than Others Dominance. This is one I pointed out. You know, looking here, we had a bearish pattern, broke down, broke out of it, retested it, got rejected, and that's that bearish confirmation. And then downtrend here, we've now broken below this horizontal support. So this is a continued falling knife price action right now. So not really worth chasing these small cap alts. If you're going to be getting into alts, Total 3 is definitely outperforming here, looking a lot stronger on a technical basis. And the reason, again, lower lows, lower highs, lower lows, lower highs, and potential lower lows. This is the area we're looking at for Others Dominance to potentially bottom out at. And if we take a look at that historical resist, so yeah, acting as support back through here in this cycle here. So, and same thing over here actually. So 2017, altcoin support, 2020, 2019, altcoin support. Look for it to come back to this level, and maybe we find support in here for our smaller cap altcoins. This is going to be a big drop though, and could hurt a lot of alts in the near term. So you need to be ready. That's why we focus on the altcoins that have a strong Bitcoin pair. You know, we haven't really been buying alts too heavily. I actually got stopped out of a fair amount of them. I've sold some alts that I had lesser conviction in. So I'm going to come over here to my altcoin tracker. Basically, you know, I've sold HBAR, I sold Lido, I sold Litecoin, I got stopped, I didn't get stopped out of Tau, I sold Near, Sui we got stopped out of, AVAX I sold, Doge I sold, ETH I still have, Inge I sold, Virtual I still have, Sol I still have, Bitcoin I still have, Link I still have, Ondo I still have, FET I still have, Cass I sold, BNB I sold, Render I sold, and Arrow I sold. So basically, I just wanted to get rid of a lot of different, you know, kind of mitigate my risk. I had kind of too many investments going at once. I'm not super interested in altcoins right now, honestly. I'm kind of liking the stock setups a lot more. They're easier to analyze. It's easier to really come up with a fundamental valuation for these stocks as opposed to altcoins, because they have actual revenues. There's actual metrics to value the current stock price and how their company is actually valued from an enterprise value versus a market kind of share price perspective. So I just think it's a little bit easier to navigate the fundamental analysis behind stocks. Crypto is really good for technical analysis based trading, I find, because investors in crypto are very emotional, and technical analysis does a good job of visualizing the emotion of the market or the market behavior. So right now, Others Dominance continues in this falling knife downtrend. Not really interested in it. Total 3 looks like it could come down a little bit. That's kind of why I've mitigated my risk in alts, consolidated into a handful of alts that I'm more bullish on for the long-term kind of play here, ones that I'm interested in adding to or kind of building positions in and getting rid of kind of the excess stuff in my portfolio that I'm not necessarily as convicted on. That's kind of just helps to mitigate my risk, increase a little bit of cash, and then ultimately, you know, consolidate that portfolio and make it easier to manage going forward. You know, you don't want to spread yourself too thin, but you also don't want to put all your eggs in one basket. So trying to find a happy medium and reorganizing your portfolio is a big part of investing. You know, don't invest in so many things that you can't keep track of what you're buying and what prices they are. Make sure you're using stop losses, you're using take profit targets, you're using alerts to keep you aware of the assets that you're interested in and the levels that you're interested in as well. We'll take a quick look at USDT dominance. Again, I'm not going to get too far into altcoins today just because I don't think the technical setups are necessarily there. When you look at the major indexes, there could be some individuals that are showing a little bit more strength. I'm going to dive into more of those this weekend, but right now, just a kind of macro update here. USDT dominance coming back. We wicked below this trend line. That's what I call a deviation. So we deviated below the trend line and we regained it, holding that higher low as support within that Fibonacci golden zone. We also could see a potential inverse head and shoulders forming. It would be a little bit dubious, that being said. So we see kind of this is the shoulder, the head, and then if we get another shoulder here, that could be that inverse head and shoulders. The only thing is that this isn't a strong inverse head and shoulders because the right shoulder is lower than the left shoulder. So for this to be a really clean head and inverse head and shoulders, I want to see that right shoulder actually above that left shoulder, which signals to me that this price action is actually trending up. So that's why we look for that higher shoulder over here. But some technical analysts do consider this a valid inverse head and shoulders. I just don't think it's as likely to play out in a measured move as it would be if we got that higher high on the right shoulder. So we'll take a look quickly at the Bitcoin futures as well. Take a look at the daily chart. Futures are important. Again, we have this daily gap still sitting here at 93,000. You know, I do expect that to fill at some point, whether we get one more push up, and that could be our final high for the cycle, and then we come back down. You know, if that gets filled, in that case, you know, I might not be looking to add to this position, or if I am, I'm simply looking to add on a bounce. So let's say, you know, price breaks up, we put in new highs up towards 120,000, and that's the cycle high. We ultimately come back down, we start breaking support here into our downtrending price action. We come here, we might only get a little bit of a bounce here, so we'd be looking to take advantage of these bounces on a swing trade basis, not really looking to accumulate in a downtrend. So again, the trend is your friend until the end. Just follow the trend. Right now, we're right at resistance. We're quite extended on a few different time frames, so we're not going to chase. We have the positions that we're happy with. We're going to keep looking for those strong relative opportunities, looking for undervalued assets, no matter what the class, whether it's stocks, crypto, Bitcoin, precious metals. We're just here looking for all those different opportunities, not spreading ourselves too thin, not wearing blinders so that we're not aware of what's going on in other asset classes and missing opportunities. There's always going to be another trade around the corner. We need to make sure that we're protecting our capital first before we are actually growing our capital. You can't grow what you don't have because you've lost it taking reckless trades. So we've actually had a perfect example recently. This self-proclaimed trader on Twitter, James Wynn, he's essentially almost blown up his entire trading account. He's lost over $100 million, I believe, at this point. He's doing reckless trading. He's going 40x long with millions of dollars on 40x leverage, which equates to about $1 billion sometimes, some of these positions. So the price only needs to move 1.5 to 2%, and he gets liquidated in his position. This is reckless trading, and then he's doing exactly what you shouldn't do. He's trying to revenge trade his way out of it. So pay attention to people like this and watch their portfolio, because if you've been following this, his portfolio has been continuously blowing up. This guy has gone from, you know, probably hundreds of millions of dollars to less. I don't even know. I'm not even sure. I'm not going to try to quantify it. But essentially, he had hundreds of millions of dollars. He's now asking for donations from his followers on Twitter. So this is not the kind of trader that you want to follow. Someone who does reckless leverage trading like that has no idea what they're doing. There's no risk management involved. It's purely gambling, and they're going to get wrecked, and he has been wrecked. He's lost so much money. He's begging his followers to reimburse the losses. You know, it's a little ridiculous that people actually are doing it, but this is the perfect example of why we come up with a system like this to avoid doing reckless things like that. We don't over leverage, we don't over risk, we don't revenge trade. When things aren't working, you step back, take a look, analyze why they're not working, change the things that need to be changed, and then readjust your strategy and attempt again. Do not just blindly jump into the market just because you lost a trade. Trying to revenge trade your way out of things is the fastest way to blow up your account. Do not do it. I've done it before in the past, and yeah, it does not feel good to really get wrecked on multiple trades in a row. You know, I've had times where I've had even weeks of just losses because the market's not always going to move in your favor. You need to be ready for these periods, and you need to not let emotion take control when these happen. You need to step back again, analyze everything, look where you went wrong. You know, the analysis might have been off. Perhaps you didn't anticipate, you know, a move in the market. You know, maybe you drew your levels slightly off and something happened. You know, we can't really predict everything. All the chart is doing is giving us the probabilities, the technical levels that are likely to act as support and resistance, and then we're playing those levels. By focusing on the fundamentals first, we ensure that there's actual tangible value behind the assets that we're acquiring, and then we look at the technicals and we're patient. We wait for the entries to come to us, and we wait for the things to move to the upside and take advantage of our profits. So thank you so much for watching, guys. It's been a decent little update here for the macro and Bitcoin. I will get into some more individual altcoins this weekend, as well as if you have any requests, you can drop them in the Telegram chat. You know, I'm happy to look at any charts, any asset classes. I want to bring the content to you that you guys want, that you guys deserve. So thank you so much for watching, and I'll see you in the next one.